Thanks so much for coming back to What the Heck is Happening in HR. One of our favorite contributors, the attorney known as David Miklas. David comes from the law offices of David Miklas, PA, with 25 years representing employers in labor and employment law. He works with small businesses or the HR director to really get you an answer. He is a sought after author and speaker, and he has spoken as a guest lecturer at more than 30 universities throughout the U.S. His office is in Fort Pierce, but he has clients everywhere in Florida. He works so well with small businesses and the HR directors, and it's because he owned businesses. I also like the fact that he answers his phone. David, thanks so much for coming back to What the Heck is Happening in HR. For our podcast disclaimer, please visit the episode description. Thanks so much for joining us here on What the Heck is Happening in HR. And today we have our contributor and our attorney extraordinaire from Florida here, and David Miklas. David, welcome back.
Thanks for having me, Callie.
Thanks. Because we have people panicking. It's March when we're recording this, and we've had this finalized rule come out on independent contractors. So we needed to find out from you what's it mean for us.
Okay, so as a practical matter, very little has changed from the Department of Labor's perspective. I've been dealing with Department of Labor investigations for many years now. And even though technically the standard was a little different at the very end of the Trump administration, the Department of Labor continued to apply the six-factor economic realities test, just like what's about to be rolled out. There's some very minor differences, and I'm going to talk about those. But I think it's important that people understand what the six-factor test is, because the vast majority of people don't even understand that. So are you fine with me going through that?
Please, yeah, thank you.
Okay. And it's important because you can go to prison for this. Now, not everyone does go to prison. It's usually the really egregious offenders, but there are situations where people, where they intentionally try to avoid paying overtime by classifying someone as an independent contractor when they really are an employee. Usually it's like the slave labor kind of situations when they send them to prison, but it's really serious. So the six-factor test that the Department of Labor will consider is the nature and degree of the business's control over the worker, the permanency of the worker's relationship with the potential employer, the amount of the worker's investment in either facilities or equipment or tools or helpers, also the amount of skill or initiative or judgment or foresight that's required for the worker's services. The fifth factor is the worker's opportunity for profit and loss. And then the sixth factor is the extent of integration of the worker services into the potential employer's business. So that would be the worker's degree of independent organization and operation. So there's one place in the Department of Labor Field Operation Handbook that actually gives us some guidance. It deals with home workers, but it still gives you a good insight. It says, the Department of Labor will assume that a worker is an employee unless the business can prove otherwise. So the factors that they tell their own investigators is that, hey, if the employer asserts that this is an independent contractor, these are the 10 factors you should consider. And, the 10 factors still are subsumed within the six-factor economic realities test. One, does the business have the right to control the manner of the performance of the work or the time in which the work is to be done? Is the employer or business paying taxes for Social Security, unemployment, or workers' comp insurance? Does the worker ever collect any benefits such as unemployment or workers' comp because of working for this business? Does the employer furnish the material or finance, either directly or indirectly, the purchase of the material that the worker uses? Does the worker bill the employer or business for the work done? Are those bills of sales prepared, like invoices? Are they paid in cash, by check? These are all the factors that they're telling us. So at the end of the day, I always envision this as, imagine having two separate buckets on the floor and you have a gallon of water. and you have to drop all of that water drop by drop into one of those two buckets. Now, you're never going to get every single drop into one bucket. Some will go in each bucket. So under this test, basically it's each of these factors will go either in the independent contractor bucket or in the employee bucket.
Okay.
And whichever bucket has more water in it is what it's probably going to be. So you want to have as many drops as possible. If you're the business and you want this person to be classified as independent contractor, you want as many drops as possible in the independent contractor bucket. So for instance, if the worker themselves chooses the hours that they're working, that's a drop in the independent contractor bucket. Similarly, if the worker is not monitored or supervised, if the worker is permitted to work for other businesses, if there's no performance evaluation, all of those things would be drops in the independent contractor bucket. Whereas if the worker works really, really long hours, 12-hour days, 50, 60-hour weeks, that's a drop in the employee bucket. If their work is inflexible, if they work in flexible shifts, if they have to sign a non-compete agreement, these are all drops that would look like employees as opposed to independent contractors. Similarly, if the worker is allowed to interact with competitors, if they can turn down job assignments, if they work project by project, all of those things would be drops in the independent contractor bucket. Whereas if they have a long-term working relationship, if they worked for the business for 10 years, if they worked a fixed term of work, those would be drops in the employee bucket. Mm-hmm. Investment in tools and equipment. If the worker themselves buys really expensive tools and equipment and they're not reimbursed for those would be drops in the independent contractor bucket. Also, if there's no mandatory training, that's what you do with independent contractors. Whereas if the worker obtains their skills from the company, that's what you do with employees. Mm-hmm. Now, if the worker can choose how many projects to take, if they're able to renegotiate their pay, if they are paid based on commission, all of those things look like drops in the independent contractor bucket. Whereas if they're paid at an hourly rate or even paid salary, those would be drops in the employee bucket. Mm-hmm. Similarly, if the services of the worker are the main purpose of the business, that would be a drop in the employee bucket. Now, as an example, a couple of years ago, Pepperidge Farm was accused of misclassifying workers as independent contractors. And as part of the argument in the lawsuit, they said, hey, you know what? These workers played a, quote, integral role at Pepperidge Farm by delivering, displaying, merchandising, and promoting its products in stores. And they said Pepperidge Farm exercised a substantial degree of control and direction over these workers because they would routinely work 55 to 70 hours a week for Pepperidge Farm in order to complete their tasks, making it basically impossible to contract with other clients. So even though they were technically able to work for a competitor, it was almost impossible because they were working so many hours for this particular one. Wow. So the Department of Labor has given us concise side-by-side comparisons and kind of like employee versus contractor. So they said employee generally works for mainly one company at a time, whereas a contractor may do work for multiple companies at a time. Mm-hmm. An employee, generally has a situation where the employer controls the income, whereas with the contractor, the income is based on profit or loss and it's determined by the worker. Employees are typically paid on a consistent basis, hourly, weekly, monthly, whereas a contractor is paid per invoice being submitted or upon a completion of a job. Mm-hmm. Employees may be eligible for overtime pay, contractors are not. Employees typically get income, unemployment, Social Security, Medicare taxes are withheld from their wages, whereas contractors, they're responsible for doing that themselves. Employees can qualify for company and government benefits, and contractors, they're responsible for seeking and arranging their own benefits, vacation, mm-hmm. sick time, stuff like that. Employees are part of the company's daily workings with continuous ongoing relationship and the integrated responsibilities. They get the employee handbook. Contractors are just generally brought in when they're needed. They're hired, for a project usually. Employees are required to follow guidelines, how, where, when to work, whereas a contractor, they establish how when their work is going to be completed themselves. Employees are trained by the company to perform their job. Contractors are already trained. They typically have licenses, things like that. They're already coming in skilled to perform the task that they're doing. Employees are typically provided tools to do their own job, and contractors bring their own tools and equipment and materials to the work site. Employees typically can get fired or disciplined. Contractors are responsible for self-employment. Employees are typically able to terminate their services at any time, and contractors, they're required to complete the contract.
Mm-hmm.
So that's the nuts and bolts. But there's some new things that I wanted to talk about. And this is really the new changes. The Department of Labor, when it comes to the workers' investment, is going to look to see if the investment was made to support an independent business, such as increasing the workers' ability to do different types or more work, or reducing their cost, or extending their market reach. Also, these investments should generally be large expenditures, such as buying a welding machine or specialized vehicle to carry something, not negligible items like gloves.
Mm-hmm.
With regard to, and the most important one is the degree of control. And I say most important, each of these are a standalone factor, and the government's been very clear that that this 6-factor test is looked as a whole, the totality of the circumstances. But as a reality, I think it's really important to focus on who controls what. So a business, according to the Department of Labor, can control a worker even without direct supervision or assignment or scheduling if it relies on technology to do that. So if it relies on technology like an app to supervise the workforce or to set a price for services, I'm talking to you, Uber and Lyft, mm-hmm. or restrict a worker's ability to work for others, that shows control. Mm-hmm. Also, when it comes to supervision, this is where the technology really comes into play, and this is what's different. A company's close supervision of a worker on the job may be evidence of, quote, employee status. Conversely, the ability to work independently without close supervision may be evidence that the worker is an independent contractor. So what am I talking about? In-person, continuous supervision is not required to show supervision. The Department of Labor is saying that supervision can be maintained remotely through technology. So using monitoring systems that can track a worker's location and productivity and even generate automatic reminders to check in with supervisors, that can be used as evidence to control by supervision. Also, requiring a worker to log in and out of a service on their cell phone to record what time they arrived on a job, what time they completed a job, that is held to be meaningful supervision and monitoring. In fact, one court found that there was direct monitoring techniques that were being used to monitor a furniture delivery driver, where the form of supervision that made it more likely that the worker was an employee. In that case, the company supervised the drivers by conducting, quote, follow-alongs. Mm-hmm. They required the drivers to call their supervisor after every 2 or 3 stops. They monitored the progress of each driver on the route monitoring screen. They contacted the drivers if they're running late or off course. Now, all this stuff's important for the customer to make sure that you can do this, but these things also support a conclusion that they're employees, not independent contractors. And then finally, remote supervision can be shown by using electronic systems to verify attendance, to manage tasks, to assess performance, to set schedules, to discipline staff, or to run payroll systems. And even if a company expresses the, quote, right to supervise a worker's work at its discretion, that alone, according to the Department of Labor, may still show evidence of control, even if the company rarely ever even exerts that supervision. So it's always wise to have an experienced HR professional or employment lawyer analyze a specific situation, because misclassifying workers as either freelancers or independent contractors or 1099s or whatever you want to call them when they really are employees can be a very expensive mistake.
Eesh, no doubt. Wow. Some of those you got to think about for a minute, right? To be able to see what they are. One of the things with all of what you said, I will hear folks say, well, the employee, we interviewed him, but he wants to be an independent contractor and not an employee.
Yeah, that's not even a factor. If you look at those 6 factors, that's not a factor at all. Doesn't matter.
And I always say it's at the discretion of the employer. They make the determination and they should pick the right thing. It's not what the person walking in the door wants to be.
Right. And what's always going to happen is that at some point down the road, there may be a falling out. Mm-hmm. And if this worker goes to file for unemployment and goes to the Department of Labor or complains somewhere, they're going to say, well, you know what? I got screwed out of overtime. I'm entitled to this overtime. So at some point, they may no longer want to be viewed as an independent
Yep.
contractor, and the burden's on the business
Yep.
to prove that they meet this test. Otherwise, the default setting is they are an employee.
Yep. And I got a call one time from a who became a client who said, "We're calling you because we can't believe it, but one of our contractors applied for unemployment and then told him that he didn't have any health care." And I went, What would give him that idea that he had that?" And so as I talked to him, well, they were being paid through payroll.
No, brother.
Yeah. So, yeah, as you know, being in employment law and me being in HR, I always call it sticky paper. You ask one question, you pick up one piece of paper, and there's like 7 or 8 things attached to it because of what
Yeah,
you
it's like an
asked.
onion. You keep
Right.
on peeling, and it gets worse and worse.
Right. And that just, I was like, well, what makes you think, well, he signed the independent contractor agreement? And I said, but you're not treating him that way at all. And so
Right.
here we went.
Yeah,
So
and then some people are like, "Hey, I spent $750 for this independent contractor agreement." Well, you should have talked to someone that really knew what they're talking about to make sure you set it up right the first time, because that paper is not going to be worth anything once a Department of Labor investigator talks to the people and asks them what they actually did.
yeah, exactly. Wow, this was like a whole little class in independent contractor stuff. So thank you so much for that. I really appreciate it, and I'm sure our listeners do as well.
Great, thanks for having me again, Kelly.
Yeah, my pleasure. Thanks so much, David.